I'd like to welcome to the program Michael O'Keefe from CAZ Investments, CAZ Investments. Michael, thanks for joining us.
Dave Aman, thank you for having me.
I was wondering if you'd give us a little bit of a thumbnail on CAZ and also your role there.
CAZ Investments is a Houston-based investment firm. We've been around for around 25 years. We've got about $12 billion spread across, 9,000 plus investors in our network. And we're a thematic investments firm. So we identify themes that we think will persist for, many years or decades. We identify the best way to partner on those themes. We invest our own money, and then we invite others in this large network to co-invest alongside us in that regard. So you're right. We are one of the largest GP stakes investors on the planet. That is, roughly speaking, about half of the capital that we've deployed across our $12 billion. We're also very meaningful minority stake sports investors. We do a lot in energy, particularly being a Houston-based firm, and we participate a lot in technology and space and defense in particular.
Love to hear a little bit about your background.
Happy to. I actually grew up in St. Louis, Missouri, so I'm a Midwesterner, and then ended up going to SMU. I did study finance, math, and mechanical engineering, and my journey from SMU to CAZ was actually quite unique. This is going to feed into one of the themes that is really central to the way that we operate as a business, and that's the power of the network is the network. And when I say the network, I mean the CAZ network, not of just investors, but sponsors and everyone that's involved in our business. And back in 2018, when the firm started looking for a unique role that was effectively a right hand to our founder, chairman and CIO, Christopher Zook, one of the existing investors in the CAZ network received that job application. And he happened to be the father of a very close friend of mine who had graduated a number of years earlier at SMU. And so, just purely out of being involved in a lot of things at SMU, being involved in a lot of different circles, and making my wishes known of this is really what I'm interested in and what I want to do, the stars kind of aligned, and I wound up getting connected with the firm. And 7 or 8 years later, now here we are. It's been a really, really fun journey. Could not be more honored to be a part of the team. We had maybe 12 or 15 people when I joined, and I think just shy of $2 billion in assets deployed. And so we've effectively 6x'd the size of the firm, not only in team, but also in assets and number of investors. So been honored to play, a role in that growth and a part of the firm.
I was wondering if you could give us a little bit of a thumbnail on the GP stakes market and maybe if you want to explain for our audience what that means.
So the concept of a GP stake is effectively providing growth capital to an asset manager as a business, and they happen to be a company that goes and raises money from other investors. So we are buying pieces of the management companies of private equity firms and helping them deploy money into their business faster, help them grow assets under management faster, help them deliver better results to their investors. And in exchange, we're receiving portions of the fee streams that those managers charge. So breaking this down into really, really simple numbers, right? If I run a private equity firm, I might charge my underlying investors a management fee, typically 2%, and a performance fee, typically 20%. And if someone comes in
Right.
and buys a piece of my business, the fees that my investors pay me, that minority investor also gets their pro rata share of those fees. And there are some really unique attributes that come as a byproduct of that. And I like to describe it this way. If I'm thinking of investing in a private equity fund, let's say a middle market healthcare buyout fund, there are a number of questions that I ask myself. Question number one, is now a good time to invest at all? Question number two, is now a good time to invest in healthcare? Question number three, am I choosing the right private equity partner to invest in healthcare? And I have to get each of those right in order to really hit a home run, right? I can get the timing right and I can even get the sector right. But if I choose my partner incorrectly and they don't make great investment choices on my behalf, I'm not going to end up with a great result. On the other side of the table, when you own a piece of the asset management firm, you get to alleviate a significant amount of that risk because of what's called cross-cycle diversification. So as a manager, I invested years ago. I'm deploying capital today, and I'm going to raise more money and deploy capital later. And so I'm getting to allocate my money at different points in time over the cycle. And all the while, I'm getting paid both management fees and performance fees. And so when you position yourself on their side of the table, you get all of the benefits of private equity and private equity upside, but you significantly reduce your risk, your volatility, your correlation to even private equity, and at the same time have the benefits of really strong yield and alignment with those that you're partnered with. So that's why we've deployed over $6 billion in the space and why it dominates such a large portion of our portfolio.
So maybe if I can summarize for our listeners how your firm differs from maybe a traditional fund or fund of funds. Let's think about a normal LP puts money into a single fund. They get charged an annual management fee, typically 2%, as you mentioned, and eventually they probably get charged a carry in the profit that comes from the firm. Let's contrast that with when you buy into a private equity firm. You're buying not just into one fund, but all funds that firm might operate over time. You're not generally paying, a fee and carry. You're receiving a portion of the fee and carry that the manager makes or the general partner of that private equity firm makes. Is that an
Yeah,
accurate summary?
that's exactly correct. We are not making fund investments into these managers necessarily. We are buying pieces of their business and we're getting paid the economics that other fund investors are paying to those managers. That's exactly right.
All right. Could I ask you one more question? Is do you
Please.
ever put money into their funds, either like an LP or maybe on a more specialized no fee or
Yeah.
reduced fee carry basis?
Yeah, there's actually two really important pieces in your question. So I'll answer the most important first, which is not really a question you asked, but I think is most crucial to understand who we are as an organization. Not only, when you say do you invest in those funds, I first thought of do you invest in your own funds? And I actually think that's the most powerful stat at our firm. So across our $12 billion of assets deployed, we have roughly $700 million of our own money from our team, our shareholders, our balance sheet that are invested alongside our investors in everything that we do. And so, typically speaking, we are not only the first money in, we're the largest money in everything that we do, which makes us one of the most aligned managers that we come across. One question you may ask that I'm happy to address later is what makes a great GP stake transaction? And alignment is at the very top of that. So, that's kind of one piece, and happy to continue that later. On the question of do you ever invest in these, the underlying funds themselves? The answer is yes, but typically from different pools of capital. So, like I said when I started, we have a number of different strategies at CAZ. One of those is GP stakes investing, in which case our goal is to go out and find the world's smartest, most proficient investors in certain categories and be partners with them at the balance sheet level separately, right? If we do our job and identify healthcare investors, consumer investors, technology investors, energy investors, typically speaking, on the other half of our business, where our job is to provide diversified exposure to private alternatives effectively, and so we're not only sitting as part owners in these businesses, but from different pools of capital and on behalf of different investors, we also get to allocate in energy funds, technology funds, secondary funds, et cetera, as a byproduct of our GP stakes business.
And I don't know if you're at liberty to share, but again, based on your investment in the firm, do you get better economics in investments in the individual funds?
Yeah, I certainly can't share specifics, but I can tell you that when you own a piece of someone's firm and you're talking about allocating multiple hundreds of millions of dollars to them, you most certainly have the option or the opportunity to get not only preferred economics, but also preferred co-investment rights, preferred insight into deals. The most powerful piece of all of this that really isn't quantifiable or in a way that we've been able to identify but is probably the most powerful piece of our diligence process is actually just the ability to pick up the phone and call these managers, on speed dial effectively. And I'll give you a great example of that. I think one of the most opaque diligence processes that exists really in private equity or venture capital in general are early stage venture investments. I looked at a nuclear company today. I won't state the name, but I am not a nuclear physicist, right? I don't pretend to know whether this company is going to be successful in deploying a reactor in 2031. And for me to pretend like I know that is really just doing myself a disservice. I'm not going to go toe to toe with the world's smartest folks in that area. But if I can pick up the phone and call Founders Fund or Khosla or any of the other, prolific venture capitalists in our network and very quickly have someone tell me, "Ooh, I wouldn't touch that with 10-foot pole," or "That's an impressive company. You should look, and here's where you should dig to really understand more." That's the most powerful element of diligence that really can exist. And you better believe that being a part owner in those firms and positioned alongside them allows us to more effectively conduct that diligence.